there's something happening right now which is a harbinger of increased volatility. There's going to be a big movement. Now, if you're risk adverse, do you look forward to volatility? No. As a hedger, it's the last thing you want, right? But it's coming. It's coming. Now, there's a lot of people that think, well, maybe it's going to go down. It's going to go right down to the floor. It's going to collapse. So, hey, even though I'm risk adverse, I'm hearing all of this about fracking and all the supplies out there. Maybe I should wait. Maybe I'll get a much lower price later on. Well, based on what I write in this report, that's not likely. The reason it's not likely, first of all, there's a similar pattern taking place right now to what took place in 2012. We had a bottom in the spring of 2012, and I was around here for that. I was writing about it in that time. I was writing about what was taking place in the spring of 2016. If you read my reports in the winter of 2015 and 16, January, February, March, I was explaining that we are coming to a major low, and we are going to go much higher, and it's going to be much higher on average over the following 12, 24, and 36 months. I was documenting that a year and a half ago. It took place. I'm not a prophet. I just study markets. I understand market tendencies. And when a market is too low, unsustainably low, because the producers cannot make money, what are they going to do? Produce more? They're going to start pulling back production. When you pull that back production, you have less supply. Pricing is going to continue to go up. And another thing, bottoms are made, and I wrote about this in the spring of 2016, March 7th report, stated that we are very likely near a major bottom. Why? Because the pricing is unsustainably low. That just makes sense. If it stays down this low for much longer, companies are going to go out of business, and in fact, many of them already have. But there was another reason. Bottoms are made when the news is terrible. When no one wants to buy it, that's when you're at a bottom. So the news in the spring of 2016 and in the spring of 2012 was terrible. That's when bottoms are near. That's when bottoms are made, on horrible news. When a top's made, when is the high made? When everyone wants to buy it. Everyone wanted to buy gas in the winter of 2011 and 12. Why? The polar vortex. It was so cold. It was historically cold. And we had very low supplies. Who would want to sell this stuff? We got to buy more. It was the top. Collapsed. Bottoms are made when the news is terrible, so that there's no reason to buy, and the tops are made when the news is great for the buying. You want to buy it, right? Crude oil made highs in 2005 with Katrina. The weekend Katrina hit, that's when crude made its high. The big boys have been buying for the last year and a half. They're looking for an opportunity to sell into the news. Now, this is a question for you. Have we had an event right now that would signal a top? Has it happened yet? Have we had a really hot summer? Have we had a really cold winter? Has a hurricane come into the Gulf and destroyed facilities? Has there been a geopolitical event? No. None of this has happened. But let me ask you, is that ever going to happen again? Yeah, it's absolutely going to happen again. I don't know when, but it's going to happen again. And when it happens, that's when the top is going to be made. That's when the big boys are going to have an opportunity to sell their positions. It hasn't happened yet, guys. It's coming. It could be in August. We could have a very hot end of the summer, in which case this market is primed to go because it's consolidated. If the people that have been selling get caught because it turns hot in August, watch how this market is going to fly. If there's a geopolitical event, if there's a hurricane, do you think there might be a hurricane that could possibly hit in August or September? Hey, maybe it'll be delayed. And like I wrote last month, the reason that there's a prediction of higher pricing is that the longer prices stay low, the higher it'll go. Because the producers don't have the incentive to be producing more. So maybe it'll be this winter. Maybe we'll have a cold winter. The longer it delays, it's coming. The longer it delays, the higher it's going to go. And your clients right now, they need to understand. We are in a consolidation period. This is predicting, number one, that pricing is about to get volatile. Number two, The future direction, the next major move is likely to be much higher. I went through and explained that what I'm saying now, what I wrote in March, that we were at a low, 16 months later, it's taken place. In 4 months, we went from $1.61 to nearly $3. In 4 months. That's in June of 2016. For the last 13 months, we've been going sideways, basically. Last 2 months, we're really consolidating. We've had a warm winter, right? This past winter. We've had reasons for the market to go down, and the furthest it could go down was $2.50. Right now, we're a little under $3. The floor of this market right now is likely around $2.50. That's not a lot of reward potential. The upside, how high can we go? I don't know. North of $5. So if you're at 3 and the upside risk is north of $5 and your downside reward potential is $2.50, that's about 4 to 1 risk reward. I used to play a lot of poker. I like those odds. But your clients might be complacent. The main idea to take hold of this is 2 ideas. We are going into a period of volatility. It's a harbinger. What's taking place is a harbinger of increased volatility. If you're risk adverse, don't sit on the sidelines. Number 2, the downside reward potential right now is minimal based on historical pricing. It's minimal. And I document what took place in 2012 into the winter of 2014. If you look at the 2 charts between 2012 and right now, what's taking place now, it's astonishing. They mirror each other. And if that continues, we are heading to an explosive rally within the next 6 months. Don't know what the trigger will be, but it's coming. I hope this has motivated you to convey this to your clients. Please read through that energy alert. Know it. Be able to convey this to your clients. Guys, I believe in this. I believe it's in their best interest. Do you believe it?
Yes.
Do you believe it? Well, tell them to your clients. Have a great day.
Thank you very much.